Hello? Hi, it's me, CryptoClick. Yeah, I notice you're trading on crypto exchanges, but without any benefits at all? That's madness. You know, I've been made an affiliate partner with pretty much every exchange out there, so if you want to get some benefits, you might as well set up exchanges with the links that I've got in the video description or in my Telegram and Discord. You can get welcome bonuses for signing up, or even better, up to 20% off all your trading fees for life. Yeah, I know, what a treat. So next time you fancy setting up an exchange, use some of the links that I've got in my video description, because otherwise you're mugging yourself off. Anyway, enjoy the rest of the video.
Hello everybody, welcome back. So I won't burden you with looking at me in the corner of the screen today. I've been awake for quite a lot of the night. It's been a rough night with my kids, so I'll spare you the gory details. And luckily my brain is still functioning probably for the next 45 minutes. So I thought I'd better make this video now before it turns to dust and falls out of my ear. So let's have a look at what happened yesterday. So what did happen yesterday, right? Because the chart was suggesting further downside. It wasn't looking very happy. Traditional markets started selling off. I even took 50% of profit off all the stocks and indexes that I bought about 6 or 7 weeks ago for the everything bounce. Remember that? And lo and behold, you know, they carried on going up. Excellent. It's the 75 basis point, which is a real weird one, really, because that's quite a high number for the rate hike. That's quite high. You know, I was thinking they should have gone for a single percent because the markets were reasonably okay. You know, could have sustained that, but no, they were a little bit timid. 75 basis point, remember, isn't generally seen as a timid approach to tackling inflation. They're still pretty heavy-handed, but the markets have been beaten up so badly for so long that they'd effectively priced that in, and look at what happened. Yeah, moving up. So I suppose yesterday's video I was saying about, you know, the breakdown of this structure, lower highs, lower lows, broke down below the triangle, and then, you know, this generally on a technical analysis basis would suggest further down. So you might be looking at this video and going, what are you talking about? You don't know anything because it went straight up, idiot. Well, I suppose if you're thinking about it from a technical analysis perspective, it is going down, and that's what all these things do mean. And although I was expecting I moved back up to the 200 exponential for what's known as a bearish retest, and then back down, just as you would have a bullish retest of the 200 exponential after a golden cross, we shot straight through it. And not only that, we're outside of this trend line now, so this resistance is now broken. The golden cross is forming again, which is a double golden cross. These ones are the ones that often do make the move. Actually looks quite good, but from a TA perspective, you know, yesterday when I made the video, it did look like it was all going to go down. This move wasn't a TA move, so this is something that you might as well just accept for what it's worth. It's not a move based on the technicals of the chart. This was a move based on the things that go on behind the chart. So an old man talking about percentages. That's all it is. All markets moved yesterday, not because of their TA, but because of an old man in a meeting talking to the world, and markets responding effectively emotionally, right? So like I say, 75 has been obviously priced in. We can see that by the size of the move, but it's still quite a big one. It's got quite a hefty number. And look, the overall direction on a chart like this, when you move outside of the 4 hourly, because we get blinded sometimes by these small term time frames, and I know that 4 hourlies might not seem small term time frames for most people, but it is. So what we're seeing here is a much different story, isn't it? This is big higher, a big lower high here, a low and a big lower low. This is a big downtrend, right? And if we think about what this generally means, is the overall chart structure is still one of a giant downtrend. We've not come back up to revisit this 10 exponential, which is unlike the Nasdaq has already surpassed that. So this is still a very big downtrend. It doesn't mean that the bottom might not already be in. It could be, but we have to respect the overall direction of the bigger trend, which offers the bigger moves. And again, yesterday's move was not to do with TA, and it was a short-term time frame move. We move it back over to something a bit more tangible, and yeah, the downside is is still the dominant force on this move here, and the only way we can really start to change that would be to break and close above, I'd say 30,000, to be honest with you, maybe even 32, so we can actually start to see a change in the overall chart structure and a change of behaviour. So it's still very much one of a downtrend, unfortunately, and all of this could get sold off or just phase out. But you know, if we apply the short-term timeframes over this, which is something that I suppose you can try and do, but remember, this wasn't a TA move. This is an old man at a table move. You know, we have to think about the TA now, which is that we've now got a fresh golden cross, and we should continue with that. That would be your moving average, your 200 exponential moving average. We can see if that gets retested and we get the continuation. The good thing about this move is obviously, you know, on a structure perspective, we broke outside of the descending trend line, which we've got rejected from 1 here, 2 here, and this wick, a fantastic wick, took us all the way down to this low. Now we're above that. We don't need to worry about this trend line anymore. What we have to think about now is maintaining this level, I would say, which is something that we're below. So if we think about this, this is where we want to stay above. We had a fair bit of price action here, and it's about 23,200, 23,300. That's where we want to get above. And then this would give us the move that we were talking about, all the way up to 26,600, and that's the reality of it. So we're back to where we were a couple of days ago when we were, you know, we were talking about breaking outside of the descending triangle and what measured move that would force us into. And again, you know, we have to break outside of it, which is good. We have to break this horizontal, which at the moment we've not, and close above it, and then we get the momentum back up to 26. And see where we go from there. But remember, even 26 is still in the context of a much larger, more aggressive downtrend on the weekly. Breaking above 30, staying above 30, different story altogether. So another thing that we can think about, obviously, is that in crypto terms, we have this bear market, and you know, we reach the peaks and the bottoms within the context of the halvings. These white lines being the halvings, halving, and this is your next halving, projected roughly around May 2024. So we'll be looking for a peak, as we already have seen that, and a low to be forming anywhere between now and, I'll probably say, between September to December. The low should already be in by then, and we would have started, or just about to start, a new bull market. All of that is just perfectly appropriate to say, because that's how it's performed in the past, and we're not doing anything different really on the weekly time frames. The only thing I was talking about that monthly is that we have a giant, you know, bearish divergence on the monthly on the overall direction of this chart. So that's something to obviously, you know, be a little concerned about. But generally speaking, outside of the monthly, it's performing exactly the same as it always has. And so whether we've put the low in now or we come down to make a new low between now and December, fair enough. The bear market, as far as time is concerned, is still in play for crypto. Never forget about traditional markets. For crypto, for Bitcoin on its own, it's still very much, I would say, a bear market. But doesn't mean that we can't have a serious rally up to 26,000, maybe even up to 30,000. But for the moment, this was not a TA move. This was an old man move. And if we're going to apply TA to it, I'll be looking for a retest of this area, 22,000, which is your descending trend line of resistance, hopefully now support, which is at this very moment backed up by 200 exponential, 50 exponential, and all the other good ones as well, 21. The lot, they're all merging into this area and moving outside of it, and we'll be closing in the next 40 minutes outside of it. So 22,000 at this point now would hopefully be the support, and if that breaks down, then the old man move was simply just a pump. You know, and a reaction like all markets have reacted to what some people are calling a dovish approach to inflation, which is madness. You go back to the beginning of the year, 75 basis points was like an emergency call. Now we're getting pumps off the back of them. Madness. It's madness. I seriously think that the markets are stupid, to be honest with you. You know, to see them react so heftily, to do, you know, and everybody putting so much weight, even on crypto, you know, everyone putting so much weight on these rate hikes is kind of silly. dollar cost averaging into Bitcoin is still a reasonably good way to play this market. But I suppose for the people who aren't skilled or haven't learned the tricks and looking to capitalize in crypto, generally speaking, you may as well wait for this cycle to fulfill and see where we are between September to December, and see what kind of behavior Bitcoin is presenting at that point, because at that point things should be entering into a new bull market and trades would be for the most part instantly gratifying and a much healthier market. The Bitcoin dominance chart itself is a little bit of a worry to me, because if we haven't moved out and broken out and gone to higher levels, it's going to make the next bull market a lot harder to trade. It'll be a different environment, definitely, but it'll be a bit harder to trade than it was in the last bull market, where we can do very easy rotations using this chart. At the moment we're still pretty low, and so I still think that altcoins are seriously at risk of getting beaten up even further by another 40 to 60% from these levels. But that remains to be seen. So the thing to take home from this is that, yeah, it was a nice move. It wasn't based on TA. We can apply the TA over it. We can see that we're getting rejections here. 22,000 is the support to hold. Outside of that, then yeah, we can maybe go down to 21,000 again. These are sort of things that you wouldn't mind seeing once breaking out of a descending triangle. So if you stay a bit of time in here, you break out. That's fine. You have a retest of the support. That could be an epic trade as well. But for now, this little thing over here, like I say, it's just the markets going crazy over what the old man said. Right, I'm going to leave with you there. But I hope you have a nice day. Take it easy, and yeah, trade safe.